whenever we talk about money, obviously you need to be very clear that people are doing what they're saying, right? So obviously everyone gets the idea of like a stable coin and a one-to-one peg, right? Sort of saying, hey, for every token that I denominate in a dollar, there is actually a dollar in another account. You do need to make sure that there is a very clear audit, that someone is taking care of that is actually true, right? Because it's one thing to say it, the other thing is to, hey, how do I prove that?
Hello, everyone, and welcome to our new episode of Fintech Garden. And today I'm really pleased to introduce Rutger van Faassen. He's joining us for discussing really trendy and hot topic. He's actually from United States, and I think it plays the best with the recent developments in stablecoin. He has really amazing experience in industry. He's the founder and CEO of Informationbanker. He leads a firm that offers weekly updates, insights, and it's called Banking on Information Podcast, helping fintechs, banks, and credit unions make better decisions. Also, he has 25-year banking veteran experience. Like he was on different side or both sides with the industry as a banker, but also as a solution provider. So Rutger builds meaningful connection between institution and fintechs. And I think today what we will talk is about the trust and building the connections, and then by using that, going into the understanding what is stablecoin and how the industry can benefit. So welcome, Rutger.
Thank you, Igor, for having me.
So the first question that I think everyone is trying to answer, we see that actually United States is leading with the stablecoin adoption. That's maybe one of the biggest event of this year so far on the Stripe. They announced that Bridge is integrated fully into the Stripe. So why do you think US is leading in this innovation?
Yeah, so obviously this has been a long time coming, right? And stable coins have been around for quite a while, but yes, we are starting to see major adoption happening. I think it's probably a combination of things, right? I think the crypto climate came out of a winter. I think the what we're seeing was that the Bitcoin was going up, and all the cryptocurrencies were actually going up in value. And then obviously the change in administration here in the US. The last administration clearly was still very skeptical of anything blockchain, crypto related, and really was trying to sort of figure things out. And whenever you're in a figure out mode, it doesn't always bode well for anyone that's trying to develop business. The new administration really heavily doubled down on crypto and basically sort of said, hey, we do need to solve this. The US does need to be a leader in the world when it comes to cryptocurrency, when it comes to blockchain. And so the two acts that have been passed and are now going to be sort of put together are the Genius Act and the Stable Act. And those actually give some nice framework for stablecoins and how the regulator is going to look at them. And I think that has given, so both sort of the administration being more favorable for this, plus crypto coming out of the crypto winter, I think that's created the environment where a lot of players now feel, hey, this is the time to actually apply this. I think the other thing that plays into stablecoin is that it's quite easy to grasp, right? Some people were still a little bit hesitant when it came to cryptocurrencies and how much they fluctuated, right? So some people were actually sort of seeing, hey, let me put a little money in Ethereum or a little money in Bitcoin, and then the value was going up dramatically, and some people got rich real quick, but then it also went down real quick. The good thing about a stable coin is that it is pegged to a fiat currency, and therefore, for as the name suggests, it's stable. So I think the name is also a good thing for people to understand what it does. And all those things coming together, I think have created this moment where a lot of players are now saying, hey, let's step into this. Let's see how we can apply the stablecoin.
Okay, and it totally makes sense. We see that's a moment a lot of things clicked in the proper state,
Yeah.
which enabled this technology to be really wide adopted and I would say even trendy in this case. And for our listeners, can you help to understand what stablecoin really is? Because I'm usually trying to use the technique from Feynman, explain me 5 years old.
Right.
Like if you would try to explain to someone in really easy term, what does it really mean?
Yes. So a stable coin is a token, a cryptocurrency that is registered on a blockchain. So in that sense, it is similar to the known cryptocurrencies like Bitcoin and like Ethereum. Um, but what it does, it has a reserve which is usually set in a fiat currency. It can be other assets, but the most common ones that we can think of, sort of the USDC or the Tether stablecoin, they're basically based on a fiat currency and in most cases US dollars. So actually, for every $1 denominated stablecoin token currency, there is actually an account where a real fiat US dollar is being kept. And so obviously having that one-to-one peg basically means that if everyone who has the stablecoin, who owns them, and sort of says, hey, no, I want to actually go back into fiat, there is always enough money to pay everyone out. So it's kind of like a 100% reserve that people can go back to. And therefore, it creates the safety that the token, which is denominated as a USD token or like a US dollar token, if it's pegged to that fiat, people know that it's actually going to be worth $1. And so if I trade with you, I pay you $10 in a stable coin, you can be comfortable that if you want to trade that stablecoin back into fiat, whether it's dollars or others, that it actually holds that value. That's the idea of a stablecoin.
Yeah, thank you for a really good explanation. And in this case, like it's really useful because, in my understanding, kind of fix this perception that when I'm using crypto assets or cryptocurrency, I don't know the final value, because if the time differs, like I bought something today and then in 1 month, I don't have any really good projection, which is different from fiat because there are central banks, there are certain rules how the currency will go. It doesn't like still it's a prediction, but with the cryptocurrency, it was more fluctuating. So I think that kind of fix one of the potential issue or the blocker for people for using the crypto is stability,
Yeah.
which is in the name, which is good. And then I would like to highlight like how many companies are issuing or minting stablecoin.
So currently, I think there's over 200 different stablecoins, but to be fair, 90% of all the volumes currently in the market are in the two stablecoins, the one by Tether and the one by Circle. They basically have 90% of all the values. Now, there's obviously other ones. PayPal has come out with a stablecoin. There's been other announcement of players starting their own stablecoin. JP Morgan Chase has announced that they're launching this stablecoin. But currently, as we're taping this episode, about 90% is in Tether and Circle stablecoins.
What do you think? Like a competition will drive this stablecoin usage, or it will limit? Because recent updates that Circle is evaluated and is growing fast. Like, what do you think is happening with the competitors and players on this market?
What we will see over time probably is that there's going to be a shakeout, right? We don't need 200 different stablecoins.
Yeah,
there might be some use cases where people like specialize in something, but if it's just this idea of a stablecoin pegged to a US dollar, there probably over time we will see a shakeout happening and maybe a handful will be left, right? If you think about it, it's a little bit like the credit card networks, right? You have 3, 4, 5 of those. And that's probably enough where there is still competition, but where you don't have like 200, I don't think that long term is feasible.
Okay, that makes sense. And for our listeners, like just to understand the scale, Tether is actually issued the stablecoin for $18 billion.
Yep.
And usually they're using T-bills from US Treasury to bake those one-to-one cryptocurrency or stablecoin to dollars, which goes really well. And I think it's not the whole volume, because then we can see that actually USDT is used other portfolios, which makes the usage even larger. So it goes with the scale. And the logical question is here, like, what do you think as a primary business case with the stablecoin we will see like this year or maybe next year? Because so far it's really hard to say about mass adoption.
Yeah.
Like I still cannot buy the coffee with USDT. But what do you think the business case which will enable and will be more mass adopted?
Yeah. So what we're seeing, the number one use case is for cross-border payments and remittances, right? So people that want to send small dollar amounts to faraway places around the world that might have currencies that are not so easy to trade, right? And that are very costly. So a lot of people might be sending money home to their country of origin. They might be using someone like Western Union. Today, that is still a slow process and a very expensive process. Leveraging a stablecoin actually can settle almost instantaneously at a much lower cost. Obviously, there is still the kind of fiat off ramp that has to be facilitated in the country, but what we're also seeing, this is kind of another use case, especially in countries that don't have a stable currency, right? And this we sometimes forget when you live in the US or in Europe. The euro and the US dollar are very stable, but there's lots of other currencies in the world that are not as stable, and there's high inflation. So actually, that's the other part of the use case, which is kind of a store of value. So if you do send money home to a country in South America or in Africa where there is lots of inflation, what you actually might see is that people keep that value, that money, in the stable coin because it actually keeps its value better than the local currency that they're in. Now, obviously, because not everyone is accepting in those countries might not be accepting this for day-to-day payments, like you said, like buying a cup of coffee. At some point, they might have to off-ramp into fiat, but that is also something we're I think going to see in future. We're going to see more and more use cases where you can actually use it for day-to-day payments.
Actually, it might happen with the Stripe with the bridge because they are adopting. So, do you think that we will see that e-commerce and acquirers adopting USDT for accepting the payments?
Yes, exactly. That is something that we're starting to see. I think also sort of Coinbase and Shopify, right? They actually just announced that you can now pay with stablecoin on Shopify, and obviously Shopify is a very large e-commerce platform. So that's already one of the leaders in the space that's already sort of saying yes, we're going to do this, and we're probably going to see that over the next couple of years. We're going to see more merchants actually that are going to be accepting stablecoins, and that will also then drive potentially more global trade. Because today, what we're still seeing is that a lot of the marketplaces like Amazon or Walmart, they basically facilitate the marketplace, right? They go to countries around the world, they buy products, or they sign people up for their marketplace, but they still do the checkout, and they still take care of potentially a difference in currency. With stablecoins, we could now order products and services from anywhere around the world using that stablecoin. So that's probably one of the other things we're going to see happen much more. And similar to that is kind of like if you want to hire a freelancer and you want to pay that person, right? So someone that might be helping you with your website, or someone that does some accounting for you that lives in a different country, you might be able to pay them as a freelancer, or maybe even a payroll using the stablecoin. So I think that's another use case we're going to see more of.
If this episode made you think, don't keep it to yourself. Subscribe to stay in the loop, drop a comment to keep the conversation going, and share it with someone in your network who cares where the fintech is headed. That's how we grow the ideas that matters. Yeah, it's definitely it has the value for the market because retaining the value of the money is really important because not everyone has an access to the wealth management, and usually the local financial system might not be as stable and predictable as in European Union or United States or other West countries.
Yep.
So actually, it gives a lot of value, and cross border is usually an issue. Like there
Totally.
are business models built around that, like Wise, and there is still a space for innovation and make it more transparent and easy to use and real time for the customers, which is happening on the local level. Like transfers becoming more real time. There are certain legislation which is allowing that, but it's still not worldwide,
Right.
which kind of tackles the technology. If there is a technology to enable that, might be the solution. And maybe the last question for today, but it's really hard.
Mm-hmm.
I recently watched The Big Short, and
Yep.
actually a little bit still reminds the portfolio with the mortgages, because
Yep.
actually the bonds were built on top of the mortgages, which seems to be like non-default enabled, because
Yep.
actually it's mortgage, everyone is paying that. And that's a little bit like similar to the structure that I see in the stablecoins, because we have a company which is having the resources which are in United States dollars, like
Yep.
T-bills. They're not going to default, but there is a company, as you said, we will see more companies coming and merge and acquisition shake up in this area, which means a specific country will be in control how we're denominating, like 1 to 1, or what will happen if it will be denominated like 1 to 2. Like you give me 2 stablecoins and I'm giving you $1.
Yep.
Is there creating a risk potentially, like, and in this area, because we have really powerful monopoly to control financial instruments? Is it the issue? Is it going to be addressed, or if it's even seen as an issue?
Obviously, yeah. Whenever we talk about money, obviously you need to be very clear that people are doing what they're saying, right? So obviously everyone gets the idea of like a stable coin and a one-to-one peg, right? Sort of saying, hey, for every token that I denominate in a dollar, there is actually a dollar in another account. You do need to make sure that there is a very clear audit, that someone is taking care of that is actually true, right? Because it's one thing to say it, the other thing is to, hey, how do I prove that, right? How do I prove
Yeah.
that you're actually holding that money? And even if you're sort of saying, hey, you're putting it in T-bills, or even you're putting it in like money market overnight, things can happen, right? And that's what we've seen during the mortgage crisis and other crises in history, is that even things that seem very safe at one point in time can also lose their value. So I think that's going to be very important to see how it's being audited. Now, that is something that the Genius Act and the Stable Act in the US are trying to provide a framework for, right? To sort of say, hey, when are you eligible as a issuer of a stable coin? How can you provide transparency about the reserves, where they are at what point in time, who's monitoring that? I think that's going to be very important. In the past, we've seen stable coins actually fail, right? These were algorithmic stable coins, so they didn't have that sort of deposit of dollars or money in bonds. This was more algorithmic based on trading. We've actually seen that fail. So that, I think, is probably the one distinction that people should look for at a minimum, to sort of say, hey, is there an actual reserve of a fiat currency, or is it an algorithmic stable coin? Because that can actually go wrong. And we'll probably, even with the ones that have a fiat reserve, of the 200, we're probably going to see one or two or maybe a handful fail. And hopefully we'll learn from that, right? To figure out, hey, what went wrong there and how can we prevent that? Because no system, no matter how good, is 100% perfect. So we always need to sort of say, hey, where is the risk? And the buyer needs to be aware of what that risk is.
Yeah, that's a rational overview, and thank you for highlighting that. Actually, it's not about even the stablecoin. No matter how we are designing an architecture in financial systems, they always have certain shortcuts which might be used in the wrong way. So, thank you for highlighting that. And maybe you have questions.
Yeah. So my big question I have is, how long will it take for consumers to truly trust this stablecoin? I think that's one of the things I wonder, and how, when do they stop caring about the cryptography in the background? I don't know what are your thoughts on that, Igor? When do you think people
Ah,
will get over that hump?
it's really interesting because, like, last year, I was rewatching 11FS podcast,
Mm-hmm.
and I have interesting case because the really first episode for 11FS, it was discussion for Apple using Apple Wallet as NFC payment.
Yep.
And that was a discussion which was a surprise for me, because almost for 40 minutes it was discussable that it's useless,
Mm-hmm.
it doesn't create additional value,
Yep.
and it's not safe.
Mm-hmm.
Because, like, why do you want to add the card into Apple Pay? Because you have the card, you can pay with the physical one,
Mm-hmm.
and that's it. So I think we will see, like, usually adoption rate in my experience with the technologies, like the life cycle for 2-3 years.
Yeah.
because that's how we, as a humans, we are perceiving the information, I think. And over 3 years, it will be able to say, like, are we really adopting? And the surprise is usually for me is like, if you take a look backward from that time, usually it looks like a completely logical step,
Yeah.
because the same was discussed vice versa with the Apple Pay, because in UK no one will use it, you don't need it, like
Hmm.
why do you use your phone with the external card with NFC, because you can do the same.
Yeah.
And no one, like nowadays Apple Pay is one of the leading channel for payments, and like it's really useful. Every time when I'm in London, I'm using Apple Pay or watches, like to go into the underground. So I think it's like 2-3 years.
Yeah.
And in my instant, we're kind of in between, because right now it's trendy. Everyone is discussing e-shops, e-commerce is adopting it, and it will take, I don't know, maybe until the end of 2026
Hmm.
to say, are we there yet? So I hope we can like mark it and measure it in half a year and a half, and see if the perception of the customer is different.
Yeah. No, and I think you also mentioned a very important example. I use my phone and my Apple Wallet to actually also go in the subway, and if that's something you do like very often, I take the subway quite often here in New York. Um, that is something that you get used to, and then it becomes sort of part of your life, right? And then you sort of really adopt it. So one is adopting the thought, and then two is actually adopting a habit. And once it becomes a habit, then actually it sort of sticks, right? And then it's very hard to change people's habits back. And that's also the moment that you
Yeah.
describe when people have that, how did I ever do without this, right?
Yeah, it's like, am I lost? Like, can I add the card into the Apple Wallet? No,
Right.
why?
Yeah,
So yeah,
exactly.
yeah.
Yeah,
Okay.
or you had to wait for like a card to be, you signed up for a card and they sort of said, well, it'll be in the mail in the next 2 weeks,
Yeah,
right? And now it's kind of like,
yeah,
hey,
yeah,
you sign up, and it's like, hey, you want to add it to your Apple Wallet so you can start paying with it
yeah.
like right now? It's like, yeah, let's do that.
Yeah. So it shows how flexible the human mind is,
Hmm.
and how we usually like bet with the projecting. But since when it's adopted, like it feels like it was all the time with us.
Yeah. No, no, absolutely. So that is clearly to be seen, right? How quickly it's going to adopt. I think what also helped with the sort of touchless payment and the Apple Pay was obviously the pandemic, right? And everyone didn't want to touch physical money anymore. They didn't even want to touch cards, so they sort of said, "Hey, let's do this without touching anything." That certainly helped the adoption. So sometimes there's external factors that help as well. So we'll see how that works with the stablecoin. The first time we will see in this era see a stablecoin fail, right? And of those 200 plus, probably one of them or two or three or four will fail. We'll also have to see sort of like how that will impact customer experience and customer trust in it, because that is bound to happen at some point. So when that happens, we'll have to see how people respond to that.
Yeah, absolutely. So I think that's the end for our today's episode. And thank you, Rutger, for joining. Thank you for our listeners listening till the end. And please subscribe to our channel. I really recommend to go to Informationbanker. Also, educate yourself with the really good episodes that Rutger is doing on that channel. So please follow us on our channel, follow Rutger on his channel. I thank you for joining and having or listening the discussion with us.
Thanks, Igor, for having me.
Thank you, Rutger. Have a nice day.